guys. Hope you guys all had a great, happy Canada Day. It wasn't really too much fun out here. There was no fireworks this year, nothing, due to that situation with the kids. They found the bird around the school and everything, but and that it was a nice day off through the week. So today is Friday, July 2nd. It is 9 a.m. I figured I'll briefly run you guys on having a box truck business as a self-employed versus a corporation. I'll briefly be talking and show you some numbers on the tax that you will be paying to the government. Now, keep in mind, I'm not an accountant. This is just an example of the numbers, and this is what I have experienced running my other businesses, and this is the brief explanation on the difference between running as John Smith versus John Smith's Trucking Limited, let's put it that way, right? And the benefits of it, and not just tax benefits. So I don't have a whiteboard, I don't have an office that I can show you guys this, but I kind of wrote it on a piece of paper. So, and I'm gonna go over it and explain and show you a brief difference. Keep in mind, it will vary province by province, but very slightly. Federal tax doesn't change. Provincial tax for business, it's very similar. Like in BC, we're sitting, I think, at 12%. No, actually, sorry, BC is 15% for small business. Ontario might be 12%, but it's all within a couple percentage. So Ontario is actually more profitable. I think BC is second highest. I think Manitoba is the highest, but it's all going to be within the same range for the tax brackets, right? So I'm going to be showing you an example of being self-employed and paying the taxes of a self-employed. Now, keep in mind as well, this information is all based by using online calculators that are provided by either tax firms or the government themselves. So, and this is just an example of what it's going to be. Everybody's situation at the end of the year might be different, and also these numbers, this is just straight up revenue. I'm not including how much you're going to write off, because you basically can write off the same as an corporate and same as being a self-employed, so the write-offs are going to be the same. This is just the bare bones numbers. If you make $200,000 a year, what it's going to cost you. Obviously, when you write off stuff at the end of the year, the numbers are going to change, but this is just to show you the difference between running a company versus being self-employed. So here I'll show you guys some numbers that I put together, a piece of paper. So let's say you guys have a total revenue of $200,000 on your box truck. All right, as I said, I'm not including any expenses or anything like that. So if you run as self-employed using the online calculators, your BC tax, I'm using British Columbia as an example, so BC tax and federal tax from $200,000, you're going to pay $69,244 running it as self-employed. This is the income tax as self-employed. So your total take after tax is going to be $130,756. To do a personal tax return, it's going to cost up to $150. If you keep pretty organized, accountant doesn't charge much for doing personal taxes like that, because it is considered a personal tax. Now I'll be talking about a corporate tax. So corporate tax, how it's going to work, you're going to have a company registered, and you will also have a payroll done to yourself. So if you pay yourself $96,000 from the $200,000, you're going to pay yourself $96,000, a personal payroll. That's almost the maximum for this tax bracket, because personal taxes have tax brackets. I think first bracket is up to $48,000. Then once you go double that, which is like $97,000, you have a second tax bracket, and as you go, the percentage increases. So if you pay yourself from the $200,000, you pay yourself $96,000 in British Columbia, your BC and federal taxes are going to be $24,218. So after tax, personal take is going to be $71,782. Now, from that $96,000, you're gonna have a balance left from the $200,000. So that comes to your company. Your company is gonna claim $104,000 as revenue. BC tax is 15%. As I said, different provinces have different, they go from 10% to 15%, depending. I think Manitoba is even higher, but depending which province you live, for the most part, it averages out about around 15%. So the BC tax and the federal tax does not change. It's always going to be 12%. So the total tax percentage is going to be 27%. So your company, from that remainder, so your company, when you have $200,000, your company is going to make you pay you $96,000 as an employee, because you become an employee. Once you register a corporation, you're now an employee of your company. Your company is a completely separate entity now. It's its own thing, and you're your own thing. So once your company pays you $96,000, they're left with $104,000. On $104,000, your company is going to pay $28,080 in taxes. So after tax, your company is going to take $75,920, and you're going to take $71,782. As I said, this is not including any write-offs or any expenses. This is just bare bone numbers to show you the difference. So if we combine these together, the combined tax, if you do it as a corporate return with the payroll and the company, the combined tax for the personal and the company, which is $24,218 plus the $28,080, that's going to be $52,298. $298. So your combined after tax, your combined revenue after tax, after you pay your personal taxes and after you pay your corporate taxes, you should be left with, in total, in your personal account and the business account, with $147,702. So the difference between being self-employed, which you would have pocketed $130,000 and $756, and doing the company taxes and the personal payroll, the difference is $16,946, which you get to keep, because the total number you get to keep if you do corporate and a personal tax is going to be 147. Here it's 130. So, I mean, there's other expenses. I mean, personal taxes are going to be about 150 versus corporate that's going to cost you about, it ranges anywhere from 800 to 1200 depending on which accountant you use at the end of the year. But still, from basically $17,000, you can still pay $1,200 to the accountant to do everything properly. You're still going to be left with about $15,000. Out of that $15,000, you still have to double up your pension on your payroll, which might be about $2,000-$3,000. But even after 17, less the $1,000 average, which is $16,000, less even if you spend an extra $3,000 on your pension, that's still $13,000 more versus having it as a self-employed registered company. Explanation why it is better to do a corporation. That's just for the tax purposes. And as I said again, I'm not an accountant, so these are just the ballpark numbers, a brief explanation, the difference between having a corporate and the payroll versus being a self-employed. The other benefits are, if you register a company, a corporation, you remove yourself from any personal liabilities that your company does. So if you drive a truck and you run into a house and the house gets destroyed, your company is liable for it. Your company's insurance is liable for it, not you personally. If somebody sues you, who owns the house, they take it to court, they're going to go after your company. They're not going after you. You're just the manager. You're just the director of your company. You just make decisions, that's it. Your company is its own entity now, right? So that's another huge thing of running a company versus being self-employed. It's very important. There's not a lot of huge difference in cost of running a company versus running a self-employed company. So that's a big one too, the liability. It's huge. having a liability on your company versus you personally, right? So technically, as I said, you're just a manager. Oh, well, guess what? I made a bad decision as a manager. Nobody's coming after you personally. They will be taking your company to court if something happens. I really hope nothing ever happens. I never had it happen before, so I can't really say how bad it gets, but I've heard bad stories when people run their self-employment thing and something does eventually happen. Their lives are ruined because whoever is going to sue you and take you to court, they're going to go after everything, your house, everything you have personally. Here it's just a company. Whatever assets your company have, that's all they're going after. If not, well, if you don't have any assets, then have nothing to go after. You're personally not liable for it. Other benefit too, the more and more companies I call regarding finding work for a box truck, more than half of them ask you to be incorporated. They ask you for your company name. They don't ask you for your name. They ask you for your company name. And they ask you for WCB that should be registered under your company name. A liability insurance, which is like / cargo insurance, has to be registered under your company name. Another benefit I ran into having a corporate is leasing a truck. Leasing a truck on your company puts it under your company name, so everything belongs to your company. So whatever happens, it's your company, it's their fault, whatever, right? So you have nothing to do with this. You're just a manager. You just drive for your company. That's all you do. And if you, most of the commercial leases on the commercial vehicles like that, some of the companies won't even lease it to you unless you have a company. Because it's a commercial vehicle, they can only lease it to a business. And it's a completely different rate compared to a personal financing. I don't even know if any companies out there will finance a box truck for you under a personal name. I'm not sure. I'm not saying you cannot, but I don't know if they will. To me, it was explained that I have to have a company to finance a commercial vehicle, lease it actually. Not a lot of companies finance it. They have to lease it. It's a commercial vehicle, it's a commercial lease. It does not work like a personal vehicle, an SUV that you're buying, right? So it's a commercial lease. You will have to have a company to get a commercial lease, even if your company does not have revenue, but they need you to have a corporation registered. So that's another big benefit. So we're talking about tax benefit that you can do. Hiring a driver. It's much easier to hire a driver for your box truck when you run a corporation, and you would pay them as you would pay yourself through the payroll, as we talked about on the taxes. You have a payroll set up, so they will work for your company. They will not work for you, because if they work for you, you cannot hire people personally, because you cannot get a payroll number if you're only self-employed. It works completely different. So you have to have a corporation if you're planning to hire people. Proper naming. When you register a corporation, there's two ways of doing it. When you just register a corporation, just be like, whatever, I'm registering a corporation, they will give you a numbered company, which will be a certain amount of numbers. I think it's like anywhere from 7 to like 8 numbers, I don't know. I think it's just 7 numbers. Let's say it was going to be 1, 2, 3, 4, 5, 6, 7 BC Limited, or Alberta Limited, or Ontario Limited. But you can also register a name as well, so you can have it as 123 Transport Limited. It looks much more presentable when you go and look for work. I see a lot of trucks all the time. They're driving around with a sticker on their door and it says 1, 2, 3, 4, 5, 6, 7 BC Limited. I don't know. That just, how do you search that company? There's no company name. All it is just a number for your company. It looks so much better when on the truck, on the door of your truck, it's gonna say 123 Transport Limited. People can go on Google, they can find your number, a website if you have one, they can trace you somehow. So it looks so much better. And once you have a corporation registered, you register a GST number and a payroll number. Make sure you guys always pay GST back to the government. It's super important. They will cancel you, they will close you if you did not return the GST to them. Should you register for a GST number? Yes, you should, because in Canada, if you make more than $30,000 a year, you have to start collecting GST. And running a box truck, you will be making more than $30,000 a year. So might as well register for one right off the bat when you register your company. Now, how do you register your corporation? if you're computer savvy, let's put it that way, you can do it online. Here in BC, there's actually BC Registers website. You can do it through the BC government website. Pretty straightforward. The name is like $30, just the name of the company, and then the corporation is like $351. You get your paperwork within a couple of days. Boom, done. You're registered. You have your corporation. You take that paperwork, you go to a bank of your choice, and you open up a business account. That's it. It's its own thing now. That's it. I'm pretty sure any other province would probably be able to do it online too. There's third-party companies online too. There's some good ones that you pay them a little bit extra. As I said, let's say in BC, if it costs about $380 to do it myself, I might pay $600 to some website that will do the same thing, but they will take care of everything for me. But as I said, it is a pretty straightforward. You're the only shareholder, one owner. There's nothing special about your company. If you do have an accountant or a bookkeeper that you can go to, they might charge you an extra couple $100 to change to set up a company for you. But if you have no idea how it's done, I would suggest strongly to go to either an accountant or a bookkeeper to go and do it. You just pretty much come in and say, hey, listen, I got to register a company, I'll be driving a truck, I need a corporation, I need a GST number, and I'm going to need a payroll number to pay myself or my future drivers. So you give them all this information, they'll ask you for which name you want. That's it. You pay them whatever the government charges them, let's say $380 plus whatever they charge for their service. I have no clue how much they charge. It can vary from $100, I bet you, to $500, depending which accountant you go to. But if you have no idea how to register a corporation, you either really get on the computer and Google and learn everything yourself and register it, or spend an extra couple $100, go to a professional that will register a corporation for you properly, and you just receive the paperwork, no headaches, nothing, right? But it's completely registered properly for you if you go to a professional, so you don't miss any steps. And then with that paperwork, you have your name, you have certificate of incorporation, you keep that paperwork safe, you have your GST number, you have your business number, and from that, when you go apply somewhere, now you're not going to say, I'm John Smith, I want to drive for you. You're going to say, I'm John Smith, but I'm a driver / owner, operator / director, manager of John Smith Transport Limited. So John Smith Transport Limited is going to be working for that logistics company, not you, right? So your company is going to be receiving the check, not you. So it's very important. As I said, once you register your company, it becomes its own entity, right? And I strongly recommend you guys do a corporation. As I said, the big thing is liabilities is the number one, I would say, right? Because your company is not liable. You have to have a commercial entity to lease a truck, do a commercial insurance on it, and everything that has to do with it. It's all commercial. You're getting into a commercial business. It all has to be set up as commercial. If you're driving a cargo van, I'm sure it's probably easier to do it as self-employed. But for a bigger truck like that, I would strongly suggest doing a corporation. So yeah, the liabilities was the big thing. Have it as your company, not you personally. And the tax, it's a big thing. If you find a really good accountant, there's a lot more tax breaks at the end of the year. Rather than paying yourself separately $96,000 and paying taxes separately from the personal, then there's way more writing off stuff. Then you can write off your part of your house too. But if you find a proper accountant, they will explain everything. You can write off certain percentage. So let's say if I have a 4-bedroom house and I have an office set up at the house, I can write off a certain percentage for all my bills. So the internet bills, the power bills, even the rent that I pay for the house where I live right now, I can still write that off as a business expense for my corporation, because my corporation is renting, let's say, one room as an office in my house. So you take a percentage of the power bill that could be spent on that. Internet bill as well, even though I use it personally, but I can write off partial of that towards my business expense, right? There's all your truck payments could be written off on a corporate. So there's so much more to do with a corporation versus being a self-employed, and it's much easier to manage, right? So especially at the end of the year, you can just pay yourself $96,000. I'm taking as an example because the next tax bracket is gonna, once we pass $97,000, I believe, in Canada, I think they tax you like 8% more. So I think if you make like if you pay yourself $100,000, which is only a $4,000 difference from $96,000 to $100,000, that's only $4,000 difference in income for you. But because you passed the $97,000 tax bracket on that $3,000 difference from 97 to $100,000, they'll charge you like an extra 8%. So out of that extra $3,000 income that you're gonna make for that tax bracket, you'll probably pay an extra $1,500 for the tax. So it's not really $3,000 anymore. It's only $1,500. So you make the $3,000, but you give the $1,500 back to the government. That's why I took $96,000. $96,000 is $8,000 a month. For a personal income, that's pretty good. You still have to keep company in your you still have to keep some profit and revenue and you name it, some money into your business as well. Because don't forget, you're gonna have expenses. You're gonna have gas. You're gonna have truck repairs, insurances, and everything. So you don't want to take, if you make $200,000, you don't want to take every single dollar out of your company. So it's at the end of the year, if your company has $75,000 left after tax, like I showed on a piece of paper there. I'm not saying keep $75,000 in your company, but keep at least half of that, because you never know. Your truck breaks down, your gas. Then out of that $75,000, you might be paying for payroll for some other drivers. Just do it that way. But make sure you set it up as a corporate, because it's super hard to get anything financed these days in Canada if you're self-employed. Because you don't have pay stubs, you don't have nothing. Not a lot of banks are going for bank statements anymore. But if you have it set up as a corporation and you are employed through your corporation, you can give yourself pay stubs from your John Smith Transport Limited to John Smith. You will have a payroll. So if you have to go apply for a credit or a mortgage down the road, they'll say, who do you work for and what's your income? If you say self-employed, your chances are slashed in half right off the bat, right? Because you have to prove themselves what you're actually making, how much taxes you're actually making. Here, you're gonna say, oh yeah, sure, here's my pay stub. I make $96,000 a year. I work for John Smith Transport Limited. Here's my pay stubs, and you're gonna have deposits from your company going to your personal accounts. So you basically are full-time employed to John Smith Transport Limited. Even though you're a manager, but you're getting paid as a manager / driver, you're not self-employed anymore. If you run a corporation, you're not self-employed anymore. It's completely different. Working for your own corporation is not different. It's not different than going working for Tim Hortons or Home Depot. Same thing. It's the same structure. So John Smith Transport Limited is going to be paying your payroll every 2 weeks, every month, whichever way you set it up. John Smith Transport Limited will provide you with pay stubs. They'll collect taxes of your personal income, and your corporation will have to pay that tax to the government, right? So your pension and everything, you can actually pay yourself pension. When you're self-employed, it's so much more difficult to do it. And I don't understand why would you have it as self-employed versus a corporation. Yeah, it costs a little bit more at the end of the year to do your tax return on the corporate versus the personal. You know, you might spend an extra $1,500, but you're still going to be making, keeping more money in your business versus having a self-employed. So I tried to make this video pretty brief, but we're still sitting at basically 24 minutes. As I mentioned before, getting into corporate versus self-employed, there's so much more to say, but I kind of wanted to give you guys a brief numbers here. I'm just outside doing some stuff here, but yeah, I hope this helps you guys out a little bit better and to decide if you guys want to do a self-employed with a corporation. But if you want to do this for a long term, I would strongly suggest setting up a corporation, doing everything right off the bat. Okay, we'll talk to you guys later.